Hi, my name's Andy Day. I'm the founder and CEO of Capital A, and welcome to M&A Q&A. We've got a brilliant guest for you this week. He's Steve Lazarus, CEO of Lazarus Consulting. I've known Steve for 10 years now, from when he was a director at Yahoo in 2011. We met again in 2015 when he was working for a venture capitalist, and again in 2016 when I was exiting my own business. Steve gave me quite a bit of advice. Lazarus Consulting is an award-winning tech and media-focused boutique advisory firm. Steve and his team are experts at business development, capital raising, corporate development, and mergers and acquisitions. He's a trained lawyer, which is handy, and has worked in legal business affairs for a number of international brands, media brands, including Warner Music, Carlton Television, Celador International, Yahoo, and MySpace, where he's a director of business development for the whole of Europe. So a very business savvy guy with tons of experience before we even started his M&A track record, where he's closed deals with the likes of Endemol Shine, Northern and Shell, Sky, AOL, Vivo, the Wall Street Journal, Google, and Amazon, to name just a few of those. Not only all of this, but Steve is an extremely nice guy. Hi, Steve. How are you doing?
Oh, thank you very much, Andy. I'm great. Thank you. Great to see you again and to be here.
Yeah, it's good to have you. So we're going to kick off. We always do this every week with a quick background check with our guests. So you get to tell us a little bit about your background, your rise from local solicitor through to the media mogul and music industry mogul that you are today. And maybe you can give us a bit of the story of how you started in M&A and the beginnings of Lazarus Consulting too.
Sure. Yeah, I'd love to. Okay, so I'll go through it fairly fast, and we can always dive back into whatever anyone wants to hear. So yes, I started off my career as a UK solicitor, fully qualified, into a top 10 city firm. But very early on, after 6 months of full qualification, moved in-house to be an in-house lawyer. First for Warner Music, and then for Carlton Television, that ended up merging and becoming part of ITV. Then I moved to commercial roles, all given sort of various names of commercial director, business development, and corp dev, corporate development for MySpace, Yahoo, and then Dow Jones. And really throughout the whole of my career, first media, then tech, it was very much very deal driven, first as a lawyer, then as a commercial guy. So the deals I'd work on were things like joint ventures, acquisitions, disposals, but then also big commercial, multi-million strategic partnerships at businesses like Yahoo, MySpace, and Dow Jones. So you put that all together, and it's a great, interesting sort of industry mix, very outward-facing roles. So what that meant was a tremendous network of senior execs who I just literally worked with across media and then tech, with amazing deal experience. And when you throw that all together, that basically formed the basis of Lazarus Consulting, which is a tech and media focused operation where we focus on striking deals. Some of those deals involve fundraising, some of those deals don't. They involve other things, or it might be you want to sell your business. I'm supported at Lazarus Consulting by a team of associates who range from CEOs, really super experienced CEOs who are not full-time, to more junior execs who can really help us on the client mandates that we have. Right. So as Andy said, shall I pause there, or shall I just carry on for a bit more?
No, go for it. I was just going to say, so you've been doing sort of commercial stuff right from the start, and working on deals right from the start, so extremely experienced. No, feel free to carry on.
Yeah, so really what we offer, and Andy touched on it, is we've given these services a label. I mean, it's an advisory firm, right? But it's a very industry-focused advisory firm. But not just my background, but also the associates, ex-Disney, Fox, Spotify, Virgin, and some bankers in there as well, and other big firms. So it's a very industry-focused, industry experience, industry network that we use to deliver mandates. But what we've done is we've given labels to the services that we offer: business development, corporate development, capital raising, and M&A. So business development can generally mean, for me, for our firm, it means different things to different people. It means lead generation. By the way, tell me if the internet is slightly dodgy, and I can switch networks here.
No, it's fine.
Just raise
You're streaming.
Okay, great. So business development really, in certain respects, what we do means lead generation, finding clients and partners for our clients. Corporate development is it moves up a level. We find those clients and partners, but then we might be looking for strategic commercial partnerships. Then capital raising, our third service, that's easy. That's just helping businesses raise money, and we're FCA regulated to do that. And then the final service is kind of M&A. I mean, these all overlap. I call it M&A. That's helping a business to sell. Frankly, not much difference, not that much difference between capital raising with you're selling part of your business and an M&A sale mandate where you're selling all of it. So that, in a nutshell, is our offering. And who do we work with? Well, we work with pure media companies. We work with pure tech firms. We've done deals for really content-driven businesses, one chaired by Lord Grade. We've done fundraising for a fintech firm led by Nicola Horlick. We've done deals for marketing tech, capital raising for marketing tech, but also we've got the sort of corporate and business development, which slots really nicely in actually to our offering, because sometimes we'll get clients who say, okay, we'd like to raise money or sell, but we want, well, especially when we like to raise money, but we want a strategic investor who can, yes, who's got the cash, but also can maybe accelerate our business plan. And of course, if it's a sell mandate, it's very much a, can you help us map out who we should be going to? And of course, that's where we really come into play, because we've got this incredible deep industry network from my personal network, the associates led network led on top, and it ends up being quite a sort of compelling sector specific offering, which I don't really know that many firms that do what we do.
Yeah.
I will pause there.
I think the one common theme that runs through all of those media companies as well is that there's a tech sort of line involved in it, isn't it? And I think that's certainly something that I've always known you for, is being involved in the sort of tech world.
Yeah.
So we've outlined a few of the things that the Lazarus Consulting does, but can you tell us in a bit more detail, because we've got sort of very specific types of CEOs here who are running agencies involved in that side of things, but there is still quite a lot of that overlap around media and tech. But can you help us understand a little bit more about how that you would assist somebody who's the CEO of an agency on a one-to-one basis?
Sure. Well, first of all, it's like, which services are they interested in, right? That's, because the services are different, right? So I think, from knowing Andy from our chats, I think the focus here is about acquiring, getting ready for an acquisition, or being an acquisition target, I believe. I think that's really what we're focused on.
M&A and finance.
Yeah, and M&A. Yeah, exactly. So really, if the conversations about, if the conversations about M&A is it you want to buy a company, you want to capital raise, it's about, right, well, who are we talking to here? What's the business? Are you ready for an acquisition or to raise capital for your business? Are you structured properly? What are the last, if you're looking at inviting capital into your business, it's about, how does it look? What are the revenues for the last few years? Or if you're looking at, it depends on what the mandate is. If you're looking at, right, you want to go out and acquire businesses, do you have the funding? Who should we go to for the funding? What's the management team look like? What's the track record? Can people trust? Can you be trusted to deliver on the acquisition? So there's lots of questions that broadly need being looked at before you properly go into the market. So there's in any potential client mandate situation, it's very much, right, you got to get to know the person you're talking to, the business you're talking to, and then you work out, yes, everyone's got ambitions to grow. It's like, are they the right ambitions for your business? Can your team, your management team, support that? Could you convince others to join you on your journey? And that's really important.
Right. Yeah. We often talk about it being a relationship business rather than a spreadsheet business. And
Yeah.
that's another good example. So really, as a consultancy, you would get involved right from the start, really, and start advising the business how to set out their store and get ready and put that business in the right place itself before it even goes out to market to
Yeah.
raise money.
Well, to raise, yeah. Well, look, I think for me, I think that there are two different the raising money transaction or we want to go and buy a business. They're very, or we want to be sold. They're very different transactions. Normally, we'll sit in front of a business and they'll say, we want, we want to be sold, or we want to go out and raise money to do acquisition. I mean, going out to raise money for acquisitions is very similar to we just want to raise money to grow our business, right? It's the same thing, right? So yes, we do get involved very early on. I mean, frankly, there are lots and lots of businesses out there that want to raise money, whether it's for an acquisition or just for growth. So it's not sort of showing off. We get approached all the time with, could you help us, Steve, Lazarus Consulting, could you help us raise money? The answer, frankly, 9 times out of 10 is no, because what we don't want is a client on board where we fail with the mandate, because that doesn't work for us, because an element of our fees are commission based. Doesn't work for the client if we fail, because we've wasted their time, and it doesn't work for the people we're pitching to, because we're wasting their time as well. So we're very careful, being a boutique advisory firm, and I think most firms are very careful about who we work with. We've got to feel confident before we sign them up, and we actually do due diligence on our clients before we sign them up. Obviously, that happens afterwards, because we want to make sure that there are no skeletons in the closet, because those kind of mandates suck up a lot of time, our time, as well as the client time, but suck up a lot of time. So we're very careful about who we work with, and we really try and pick. This is the success. When you're not paid by the hour or by the day, it's not like we're lawyers or accountants. It doesn't matter what happens, we get paid. It's very much like we try and pick the winners, and then we try and go on that journey with the winners as long as we can.
Yeah. So you must get approached by quite a lot of people if you're disregarding most companies that do approach you, because I'm on your mailing list and you always seem to be working with new people. So definitely
yeah
to your reputation. So we kind of touched on it a little bit there, but I wanted to ask you, what point do you think that a business should be at before they start to make acquisitions? Making acquisitions to grow. Do you think there's a right time in the life cycle of a company to start looking at that as an option? Or, I mean, we're starting to see a lot of SPACs now, aren't we, and SPVs. Do you think a business can start with an empty sheet of paper and go shopping?
Yeah. Look, I think I think there is a right time for an acquisition and a wrong time. I think a business naturally goes through a period of organic growth, and therefore, as long as it's growing at the right pace, it's a good thing not to rock the boat. But businesses do get to a point where they're like, okay, we're growing at a certain rate, but if we want to accelerate that rate, we need some external support, external finance to grow. And I would say, the great majority of our clients who we're raising money for are ones that are looking good from a revenue perspective, a growth perspective, but that injection of capital will fast track their growth. That's really common with the businesses we work with.
Mm-hmm.
It's, yes, we could carry on, and in 3 years' time we'll get to that level, but actually we want to fast track that growth and grow much faster, and we can only do that with a proper injection of capital. That's really common. But it's about, as you say, timing's everything, right? It's about, I think the business has to look like it can handle and integrate an acquisition, because otherwise, when you go into the market, you got to be you need to convince the business you're acquiring that you can take them on and it's a good idea, and you also need to convince the people who are funding that acquisition that you can handle it, and they should part with cash to to fund that acquisition.
Yeah.
So there's a lot of convincing going on, and really, so you need to make sure that your business is in the right state where you can say, look, I've grown this so far. Look at the metrics. Just give me more money, and I can grow. I can double, triple the metrics.
Right. Yeah, there's a lot of convincing in there. I think that's a big part of it as well, isn't it? Because you're asking somebody to hand their baby
Yeah.
over. So you need to have
Yeah.
a trustworthy look about you. Do you think that's it's important that somebody that's going out to make acquisitions, that they build the team around them first before they start looking at that? Obviously, they need to look at it as a strategy first, but there's a team play as well, isn't there? And who do you think should be on the bench?
For sure. Well, I think management team are really, really important. Most people who are looking to invest into a business, and if you're making an acquisition and you haven't got the funds to finance it yourself, you'll have to go to third party, right? You have to go to a third party, so that kind of, any third party where you're asking for external investment, the first thing they'll look at is, well, what's the management team? Do we trust these guys with our money, with our investment? So the strength of the management team is really important. Ideally, it's not centered around one person. There's a finance person in there, someone who, put it this way, when we do a raise, I'm always very conscious that we're going out asking for third party investment, and I like there to be a finance type person on that management team, whether it's even part-time, just to prove that there's a sort of a safe financial pair of hands.
Right.
Not that the CEO can't handle, but it's just extra assurance. I think that's really important. And of course, what's super important is past track record. What's been going on in this business for the last few years? Can you prove growth, revenue growth? Clients have grown from X to Y. But yeah, I think management team is very important.
Okay, so somebody like a CFO or an MD with that sort of experience is going to be important to have on.
I think so. Yeah.
Okay, one thing I want to ask you about is the seemingly high costs of fees when engaging with an advisory. And I'll tell you something, actually, Steve. When I met with you, it was one of the things, we worked together in the end. We didn't hire you. And at the time, when I was trying to sell my business, I remember thinking these fees are really, really high. But now with hindsight, I actually wish we'd have gone with you, because I realized the value that you were bringing now with hindsight. But the way that it worked out was actually I went through a very long period, probably would have been much shorter if I'd have worked with you, where I kind of got sort of, it was like choppy seas everywhere that we went for a long time. And because I had to do so much myself, and it was a big learning curve, which is great because I'm here now. But had I just worked with you, it would have been quite a bit shorter, I should imagine, and a slightly more successful exit for me. Well, I want to ask you a couple of questions off the back of that. So firstly, what exactly are you doing that costs so much? And secondly, what is the risk of buying and selling the business without an advisory involved?
Yeah, okay. So this is something that really comes up a lot. Not the complaints about level of fees, more about, do we need an advisory firm to do this? And the answer is, well, there's lots of reasons why you should have an advisory firm. Of course, I would say that I'm running one, but I think one of the most important reasons is that we know what we're doing. This is what we do for a living. We see lots of different deals going on all the time. So we're specialists in running a process, doing these transactions, and that means we've seen the pitfalls, we've seen them fail. We know the failures. We know what's going to fail. We know what you need to succeed. You just don't have that knowledge when you're running a business yourself, because you're just too busy running your own business. You haven't got that knowledge and that insight. You only get that through doing this for God knows how many years. Mm-hmm. So that's one part of the process, avoiding pitfalls. The other really, really important piece, and this is what we get with all our clients, is that yes, you could probably source someone interested, maybe two people interested, but the real recipe for success is running a process where it's a defined process. You start at the beginning you're at the end, and you get everyone at the same time with the same materials, looking at the same information, and then if you run a proper, this is where the sort of the legal part of me comes in, because very, law is very process driven, right? I mean, I always say ex-lawyer though, but it's really helpful. We run a proper professional process, and where you get at the end you get a competitive situation. Ideally you have multiple people interested. There's a competitive choice. You can then negotiate on the deal terms, and I'll come back to the deal terms. You can negotiate on the deal terms of whatever it is, an investment or acquisition, whatever, and you get a choice. Not only do you get better deal terms at the end of that process, but you get a choice of who your partner is. So and that's really important, because when you strike a deal, whether it's investment, you're buying another business or selling your business, you're stuck with that person for God knows how many years. And it's really important that there's a bit of chemistry there. But what's also really important is that you're getting it on the best terms possible. And what I've seen, and what advisory firms see all the time, is the offers that you get, the types of terms. There's no standard offer for an acquisition or an investment. They vary massively, especially investments with VCs and family offices and high net worth. I mean, the terms that you get offered vary from I'm going to invest in your business, but I want my money back after 3 years. Well, hang on a second, that's not really investing if you want it back. That's more like a loan. I want fees on top. I don't want fees. I mean, let's not even go to the valuations. What's your business valued at? The terms vary so much that one of the rationales for hiring an advisory firm is that you've got all those, you've got a few people that you're negotiating with, and you can pick and choose who you like the sound of and the terms that you get. And I think the final comment on why is it so expensive is the problem as an advisory firm is that the client is not obliged to take those deal terms at the end. So you have to, you can do the best deal possible and find the best terms, but the client can always go, thanks, but actually we've decided we don't want to buy, we don't want to sell, we're going to stick it out. For whatever reasons. There's 100 reasons. It's not like buying a house where you got to move because your lease ends, or it's like the client can just go, actually, I don't want to do it because I've, come into some money, won the lottery, or we've decided it's a bad time to sell, buy or get an investment. So, that's another thing you've got to factor in. We're not paid by the hour or the day. So you have to think about that as well. I mean, it's quite hard to think about that when you're the client, but actually think about it from the advisor's point of view. And that's often that sort of the fees are a factor of that as well.
Yeah.
Phew.
Definitely as well. I feel your pain. So, I mean, that's something that we get all the time as well, which is surprising. And most people don't probably realize, actually, we get a lot of deals that are ready to close. And then our own client will pull out at the last minute for no real reason. And sometimes don't even explain to us properly what that reason might be. And so you've done all of that work, often a year's worth of work, for then to be no sort of finish of the race, which is quite exhausting to run the race but still not finish it. But it's very common, isn't it? So that's quite interesting.
Yeah, and boy, I could give you some amazing examples of why deals that we've worked on have fallen through. Obviously, I like to focus on the successes, and we've had loads, but I can tell you some slightly amusing examples of why deals have fallen through. One of the major shareholders is a Russian who's got invested as they're coming back into the UK. Definitely don't want to mention their name. Another is an ad tech firm and Group N decided they don't like that technology and they're going to ban it from any of the agencies in their network. So things like that happen through the process, and you're like, oh, okay, kills it. And anyway, there's lots of reasons why deals might not happen that completely beyond your control.
Yeah, no, I know all about that. It's a nightmare. So one of the things that I think that I've got from that as well is the sheer number. So I mean, this is a sort of coaching course, and we're taking CEOs through the process so they get some background understanding. They can do deals themselves. Obviously, nothing stops you, particularly at the smaller end. They're doable. But one of the things I talk about is this sort of sheer size of the search that you need to get just to get those few conversations, like you're saying, at the end. Because really, the place where you want to be is all of those conversations happening around the same time and you being in the driving seat so that you can pick, like you said, you can pick the terms and not just end up with, you know, the girl that nobody else wants to kiss or whatever. Just some of those transactions, you almost touched on a little story there, but some of those transactions that you've worked on at Lazarus Consulting, I know that you don't really work on agency deals per se, but you do the media and text and entertainment, and it's got a lot of similarities. So you don't need to give us too much information on the actual companies, but are there any deals that stick out for you that you've done or worked on at Lazarus Consulting, or even before?
Mm-hmm. Yeah, look, I mean, you did ask me before this, you know, have we done any agency deals? And we haven't, but we've been exposed to them. You know, we've worked with businesses that you know, we get presented with buy and build strategies. We're an agency, we want to sell, you know, so it's not like we haven't been exposed to businesses that want to form groups, agency groups that want to form, because we have agencies that want to sell a stake, a partner wants to leave. So yeah, but in terms of sort of closed deals, our track record has been more about investments. Well, on the capital raising and M&A, our track record has been more about closing investments into fast growth tech firms. That's probably been a bit of a theme. We have closed investments into pure media firms, a pure content firm, for instance. But in terms of sort of M&A type capital raising, for sure, there are a number of clients that we've closed significant investments from. We closed a 7-figure sum in December, actually, which we're going to press release, or the client's going to press release next week. So we closed, it was an e-commerce firm where we closed for an investment from a corporate investor. We closed a cash investment, and we're doing a crowdfunding raise as well. And then we've got another firm that's doing a crowdfunding raise, again, a mix of crowdfunding. Currently, it's going to go live in a month or two with a cash investment. In terms of prior deals, we did an investment into a fintech firm, a money lending fintech firm. So all different. Sometimes are the investors that we find are private high net worth individuals. Sometimes they're corporates. Sometimes they're a pool of cash investors. Other times they're VCs. But really, it's the rate. I mean, we cover. I think for us, if it's a tech or media business, we take, in our investment network, that's what I call our business is broken, is relies on what this investment network for the capital raising. It runs from high net worth family offices to PEs and VCs and strategics. Anyone who's interested in investment in tech and media firms, that's who I call they're part of our investment network. So we're not fussed. I don't mind if it's $1 million or two from some private high net worths, or it's a couple of million from a VC. As far as we're concerned, if they're interested in a tech or media investment, then we'll keep them updated of who our clients are and hopefully get them interested.
Yeah. Well, it was only because you said that you hadn't done an agency one, but I actually think the agency businesses and media companies are very, very closely matched now and becoming more and more closely matched. A lot of agencies now tend to own their own channels as well, which is something that's really similar to, probably the major difference between an agency and a media company, they don't own their own channels. So I think.
Look, I was going to say, from my point of view, there's no difference between an agent. If you're helping an agency do an acquisition or helping a tech firm do an acquisition, there's no difference. It depends on, and if you're helping them raise money, it's the same process. And we do have good, strong networks in the agency world, and in the brand world as well, through our business and corporate development arm.
Yeah, well, an even stronger one now. You've done this, Steve.
Absolutely.
Okay, so I was going to ask you, what's the number one piece of advice you would give someone who is in the process of buying a business? I realize that would be a bit late in the day if somebody was to come to you and say, I need some advice, Steve. but I'm already in the process of buying a business. But where do you think most people sort of would go wrong, or what's the sort of difficult thing that you have to deal with the buying process?
Yeah, look, I think I mean, obviously, if you haven't bought a business before, embarking on it yourself without any sort of experienced execs who've done it before is very tricky. So especially when you're trying to run your own business at the same time. I mean, that's one of the reasons maybe I didn't touch on why you also use an advisory firm or lawyers or accountants, because you can't do it all in-house yourself. It's just too much work if you want to carry on running a business. And it's the same thing if you're doing an acquisition. If you're, you know, if you're the CEO and you're running an agency, you're also running the deal. That's very time consuming. So, you know, you can't let, you know, if you're running a small agency business, you can't drop the ball. You've got to, so in terms of, I think your question was what do you look out for when you're buying another business? Well, you just need to make sure everything is in place and it comes together. I think, first of all, you need to work out who you look at yourself first. What is it that we, you know, what is it that we want that could help propel our growth? You know, so you look at yourself, what do we need? Then you think, okay, right, well, you know, we haven't got this arm, we haven't got this, I don't know, an SEO agency type, a digital agency type extension to what is a classic media. So let's go off and focus on a target. So it's really, I think step one is, what's the kind of target? Who's your ideal target? It's number two, oh, you think you might have found them. Then it's like, okay, have a you know, connect with management. Is there a meeting of minds? Does it look like someone you can work with? The last thing you want to do is be stuck with a relationship that actually won't work. It's a very, you know, acquiring a business, you know, you see it all the time, acquiring, and then the founder, you know, the founder of the business you acquire fall out and they want to run away and, you know, don't stay with you. That's a terrible deal to do. So it's about, you know, it's about, is there chemistry before you get into sort of the commercials, and then it's about, you know, what are they looking for? How long have they been on the market for? What do they like to work with? What are their client contracts like? How professional are they? How, you know, what are their, and then it's about DD. What do their contracts look like? What do their revenues look like? What's their reputation? Do we think it will be a good fit? All those sort of obvious questions that maybe you could try and cover without engaging those very expensive advisory fees. But I'm thinking more, you know, legal and accounting. But yeah.
Right.
Sorry, that was probably quite broad strokes, broad brushes.
No, I think it actually follows along with some of the advice that I've said, but certainly the very first thing you should be thinking about is what is the target, you know, ideally, rather than kind of blindly just starting or looking at everything or anything, you know, whatever's on the market, it's always going to end up a mess. And the other thing I think is important as well is, quite often we work with the chairman of a business. So the CEO, like you say, is left to run the business while the chairman and us will go off and try and do an acquisition. Sometimes if we work with the CEO, quite often he has a very strong management team so that he can take his concentration away. So I really do think that is very important what you've said there. Every week we ask a guest, no matter what their speciality, but it's good that we have someone who's very focused on financials. We ask them about financing deals. So you're obviously working on quite big corporate deals a lot of the time, but if you can try and think about the smaller deals that you're working on, some of the smaller businesses, sorry, what I was going to say was, if you think about some of the smaller deals where you're still working with a founder who's in the business, how would you build the finance for a typical sort of sub £5 million deal? So what would you be looking at to build that pizza up with the slices of different bits of finance? What's the Steve Lazarus way?
Right. Yeah. So I think the question is, we've got a client, they want to raise money. how would we work with them to raise up to 5 million? I mean, a lot of our raises are under 10 million, to be honest. So 5 million is under 5 is probably half our clients are we're raising under 5. Don't think we're doing 100 million transactions all the time. So a mandate where the raise is up under 5 is very common. How would we go about it with the client? Well, first of all, we would get to understand the client business, and then we would say, right, so what is it that you want to, what kind of cash investment do you want, and what's it for? And then we put that into documentation. And that's really important, because you have to have what you want to do mapped out in some really easy to consume documents that really tell the story of who you are, who you are, what you've done, your credibility, the team, where you want to go, what's your strategy, what you want to raise, how much do you want to raise, what do you want to do it for, why is it in line with your strategy, and what will, once post deployment of that investment, what will the business look like, what are the projections? And I think this is answering your question. It's about putting all of that into an easy to consume document that can be used to convince investors to part with cash. And it's a core document of what I call an IM, an information memorandum, and a detailed and other documents, but I think the core document is an IM and a detailed financial projections of what happens after you've taken that investment. Does that answer the question?
It does a little bit. So yeah, so we're getting a document together and sending that out to investors. So I think what you're saying is that the majority of the work you do would be to go to in different types of investors to put money into a deal. And does that work for acquisitions as well? So somebody gave you a mandate of raising money for acquisitions. Is that strategy that they come to you with? Is that
yeah, absolutely. I mean, absolutely. I think it's no different. It's what's the ask here? The ask is, the client, like, we own this business and we want a chunk of cash that's not ours that we want to deploy to grow our business. It's no, it's the strategy, an acquisition strategy is no different to an investment strategy. It's the same thing. Where you're not funding it yourselves, you're asking someone else to fund it. You're asking someone else to part with an investment into your business. It's the same skills, the same documentation is required. The only difference is it's about use of funds, right? It's the few slides on what are the use of funds. The ones, it's either we want to do it to build up our tech, we want to do it to build up our team, or we want to do it to buy these businesses, and we've identified these businesses, and you name it, you don't name them, this is the kind of businesses, and you can, and that's so that's the difference. It's not much, frankly. It's setting out what are you going to do with use of funds section. We're going to do it to buy this business, and this is why it makes sense to buy it.
Okay, so I mean, I think for the smaller deals, I mean, there usually are a number of places you can go to get pots of cash. So it could be debt or it could be equity, and I think you guys are obviously very expert in raising capital for people, so it would be more likely to be an equity play. So if somebody came to you, they would be giving up a percentage of their business. You guys would be raising money against that, and then the money could be used essentially for anything that you want, as long as you're explaining exactly what the plan is to the investors. Okay, so could you finally tell us a little bit about one of the deals that you're working on at the moment? Obviously, there's quite different circumstances in the air with COVID, and I think people are all feeling like we could be going back to work at some point in the not too distant future. But it's obviously thrown up lots of opportunities as well. So I don't know whether you have like a particular COVID example, or maybe you've seen a lot of different types of businesses looking to offload assets, or I mean, do you have a deal that's in the offing at the moment that's kind of COVID related?
Yeah, I mean, I think we do. I mean, I'll touch on the deal that we did in December. So that's an e-commerce business that helps you. wonder if I could disclose it. I probably won't at this point, but it's an e-commerce business, which is kind of like a bit of a comparison site. So you can buy certain items on this website, and of course anything online e-commerce has performed pretty strongly over the COVID era. The issue with this business is that it was all ready to launch. We launched the fundraise. We were ready to launch the fundraise in March last year, which is quite possibly the worst time to launch a fundraise. No one was doing anything in March last year. Everyone was grappling with home working and homeschooling and people being ill around them. So the process was massively slowed down, but the business actually was still there and still sound. And we weathered the storm and we closed the raise, closed in December. And as I said, we're announcing it next week. So by the time this goes out as a podcast, you'll be able to attach the press release. Well, you probably won't, because it won't be that interesting. But anyway, but yeah, it was a success story in the end.
Yeah, we've definitely seen a lot of use of e-commerce, but I think some businesses have gone down too. So it's it's good to be on the receiving end of some good news. Just very quickly, Steve, can you tell
Absolutely.
us how to stay in touch with you? I think I'm probably on your mailing list, so I hear most of your.
You are.
And how about other
It's
people?
easy.
Find you? LinkedIn.
Yeah. LinkedIn. I mean, I was an early adopter of LinkedIn. I've always loved it, and it's a tremendous tool. And so, yeah, connect with me on LinkedIn, and then by virtue of being a connection on LinkedIn, we'll add you, because that to me is a GDPR friendly. That's a sharing of data. By connecting on LinkedIn, you're sharing your email address if you've got it in there. And then we'll add you to our newsletter. We do a newsletter every four to 6 months, and of course, but we regularly post all our news on LinkedIn. We use it as a good driver, a reminder. We don't, it's a great reminder to tell. I know, Andy, you see my posts, but it's we obviously we do business off LinkedIn, as in we do a lot of direct approaches when we have a client mandate. But we use tools like newsletters and LinkedIn posts to remind people. Oh, right. Oh, yeah. I didn't respond to that email. It stops us chasing. Most people, ideally, that's the theory anyway, because they've seen a post or they've received a newsletter.
Well, I'm going to share your LinkedIn profile in our group later on, so hopefully everybody
Perfect.
will follow you. You can nab their email address, but also a hot tip there from you, Steve, how to build your mailing list. Okay, so I'm going to open the floor. I'm going to open the floor now and see if there's any extra questions coming from everybody here. Just might as well switch Will's microphone on for him.
Well, please feel free to go ahead, anyone. I do have. Thanks, Steve. That was really good. I'm trying to kind of get some of these ideas into a question, but I'll give it a go. I guess with honesty, I think that given the sort of relative inexperience of us going into this space and wanting to do one or multiple acquisitions, there is this sense that there's a kind of almost like a sharkiness around investors and finance, and that if you actually get to any decent target where you've got to, finances, you can see, demonstrable that, look, they're going somewhere, you can see value in them. It doesn't seem to be that much of a problem to find someone that's also going to see the value in that. And it looks like, given that everyone's incentive is to, everyone's paid on success, that you've really done you've done something quite good if you've actually got to that stage of, right, I've had a conversation, they're on for a deal, I need X amount of money, what do I do? Now, I guess my question is that, would you, I understand what you were saying a lot at the beginning was about, look, work with a partner at the beginning. However, how do I kind of like reconcile that with this idea that if I had all my targets lined up, ready to go, would I be right to do that kind of beauty parade of finance options, and where I could look at a whole range of them, whether I get this, because essentially it becomes a finance question, and there's obviously multiple places, multiple mechanisms that could be used there. I'm not sure there's quite a question in there. Do you think there's a question in there for you?
I'm not sure I found a question in there. I think that, did you find one?
Yeah, I think you're kind of saying, well,
So
what stage is the right stage to go to somebody like Steve? Is it to get them involved early, or do you go with a selection of targets?
I would say that. Would you advocate that we did do that? That we kind of go and say, look, let's get these targets to this advanced stage, and then answer that question. The risk being, I guess, is that your target's going to want to know where this money is going to come from as part of that conversation, or start earlier with that. Start earlier, show your strategy, show your targets to a consultant, work with them to see it through.
I would say not so much about a consultant, but I would say I'd work backwards from that. I would say line up your funds. Try and line up your funds as best as you can, because if you're going to a target without the funding, the means to finance it, I would say you're wasting their time, your time. I know it's a chicken and egg thing, because you go to a finance operation, they go, well, what do you want the money for? You know, if you say, well, I don't know, I just want to try and buy a bit, it doesn't work, right? But I also don't like the idea of you guys, if you're going to having conversations with potential targets, not having a source of funding lined up. So I would much rather recommend that you get a funding partner lined up, and you get them interested. Don't say you don't have a deal with them, but you'll say, look, this is my company, this is who I am, this is what I've done. Now I want to do a bolt-on acquisition to grow my business from X to Y. Does that sound, this is the kind of business that we're looking for. Does that sound, or maybe even disclose the bit, does that sound something that you would finance? And then try and do it that way. Try and get early expressions of interest. Find out who is interested, because otherwise you're going to find a target and then you work backwards. Right, okay, they're interested now. How are we going to finance it? I mean, it's hard though, because of course you go to how are you going to find that potential finance source? Well, it's hard for you guys, right? Because you don't have that network. So, it's then hiring an advisory firm. You're right. It's time, it's money, it's effort. It's hard to get all the. I'm not sure I'm giving you the answers here, but I think you kind of want to do everything at the same time. Try and have those early indications of where you're going to finance the transaction, and then go and have those early conversations with that potential target.
Spin both those plates.
Yeah, it is a lot of spinning.
Is it catch-22 situation?
I'll just put it up there with all my other plates.
Yeah. Is it a bit like Hollywood, where the script goes to certain agents, and once people have passed on it, that everyone passes on it, kind of thing? Do you think? Have you got to be careful about who you go to first?
Yeah. I mean, totally. If you've got, well, that's why you might not mention the target name. You'll mention, look, we've. Yeah, I mean, it could be. It all depends on. It's quite, it's quite hypothetical, this conversation, but I would say it's probably good to identify the kind of target you want, set out in a document your strategy about who you are. This kind of brings me back to setting out in paper, because sometimes when you put things down on paper, it might formulate your opinion anyway. Put in who you want to buy, where you want to go to, and this is the kind of profile of a potential target. Even having someone in mind, maybe even having a light touch conversation with them, but really importantly, trying to find an early backer for your acquisition.
Cool, that's really useful. Thank you.
Okay, cool. So I know we're running on a bit today, a little bit late, but has anybody else got any questions for Steve before we finish?
Yeah, I do. Hi, Steve. Thanks very much.
Hi, Jerry.
You mentioned crowdfunding earlier, but I thought crowdfunding would be quite an expensive route to raise funds.
Well, in terms of, it's not so much that it's expensive. because I mean, I'm not sure it is an expensive route, actually. I think it ends up costing probably as much as hiring a advisory firm, broadly the same. It's more about, it's a very public way to raise money, and that level of information and sharing of information in the public domain doesn't suit every every business. So crowdfunding makes absolute sense when you're talking about, in my opinion, you're talking about a B2C offering. So like, a burrito type restaurant chain, and it makes sense getting the word out that you're raising money on a crowdfunding site because you want to engage the public. But it doesn't necessarily, for me, work as well with a B2B type funding situation. But in terms of costing, I don't think it's substantially, it's broadly costing amount the same as having a firm on board doing it.
Yeah, that's a good bit of information. Actually, just thinking then, as you were talking about, that Brewdog's been really successful at that, haven't they? Raising money via crowdfunding, and that's
Yeah,
it's
yeah.
really well loved. So it makes sense for them to go out to their customers.
Yeah, look, we're very, look, I mean, crowdfunding is not for everyone. You really need to have your own crowd that you bring, even though you're going to another platform and you want to get investment from their crowd. Quite often you need to take your own crowd to that platform for the crowdfunding site to be interested, and you also need to take your own investment as well. It's very rare that you successfully raise on a crowdfunding site with solely funds raised through that crowdfunding platform. You need to have a few investors in your pocket, which might sound a bit odd, but that's the way of crowdfunding. So it's not for everyone, crowdfunding. It suits some businesses, but doesn't suit others. And it's a very public way of raising money, as I said, and that's not necessarily everyone's cup of tea.
Okay. So any more questions, Thomas? So Thomas he's got a tech business. You might be interested in speaking to him at some time, Steve. Okay, any more questions from anybody before we close the conversation down? All good. All right, thank you very much, Steve. Really appreciate that. Sorry if my questions were a little bit fuddled. I think you had a bit of a job trying to...
No, not at all. It was fine. It was great to me. I hope that was helpful. I didn't talk too broadly, and that there were some learnings that you could take away from it all.
No, it was very, very useful for myself personally. So I'm sure everybody else got something out of it too. All right, thank you very much then. Thank you, Steve, and thank you for everybody's participation.
Brilliant.
Really enjoyed it, and we'll get
Brilliant.
a copy of that up for everybody to see later onto our YouTube and share it via our newsletter. I can then let you have a look at it as well, Steve, for posterity. And then we'll be using the audio at a later date for a podcast. But thank you very much. Enjoy the rest of your Friday. Have a great weekend, everybody.
Thanks.
Cheers.
Nice to meet you,
Steve. Thanks,
nice
Andy.
to meet you all. Cheers.